Okay, welcome back. So in the first video, we did the receipts section of the cash budget for 2004. And second video, we did the payments section for the same question. And now in this video, we're going to finish off the question. And the first line when finishing off the question is the net cash flow line. And the net cash flow is the difference between the amount of money you took in and the amount of money that you paid out. So if the amount of money that you took in, for instance, in August, the amount of money you took in was 351,330. If that is bigger than the amount of money that you paid out during the month, then you're going to have a positive cash flow. You're going to have money left over that month, if you like. But for instance, in July, where the amount of money you took in was 149,625 and the amount you paid out was a greater amount, 219,617, you're going to have a minus figure when you subtract this from that, because you're left with a negative amount of money, if you like, at the end of the month. So first thing we're going to do this line is we're going to subtract all the payments from the receipts. So this will be subtracted from that to give me a minus figure here. This will be subtracted from that to give me a plus figure. This from that will give me a plus. This from that will give me a plus. This from that plus. This from that will give me a plus. So the first one is going to be the only minus figure. So let's just do the first one first here. And we're going to say 149,625 from here. 149,625 minus 219,617, giving me minus 69,992. Okay, 69,992. And because it's negative, how we like to show this in this counting question is with brackets. Okay, just going to do the second one now. It's you took in 351,330. And you paid out 327,617. So you had a surplus of 23,713. 23,713. Now I'm going to just pause the video and calculate the last few months there. Okay, so I've just calculated those few and added them in. The next thing that will go into this one is the bank loan. So I mentioned earlier that there are two different ways of treating the bank loan. So it says in July, when you were purchasing this equipment, in order to finance the purchase, you got a loan of the business got a loan of 50,000. So that goes in next here, bank loan. And it's a plus 50,000 because it's money coming in during July in the form of a loan. The bank gave you that money, so it's money coming in. Now, as I said, there are two different ways of doing it. You may see in some answers, and what is acceptable, I suppose, in the Leaving Cert as well, is to put that bank loan up with the receipts because it is money coming in. So we could have put another line in here, bank loan, and just put it in for July and have nothing for August, September, October, November, and December in that line. However, the more usual way you'll see it, and it's the way that they tend to show it in the sample solutions every time this comes up in the Leaving Cert, is to put the bank loan down here. But as I say, acceptable to have it up here, and you may come across that from time to time as well. Okay, so the next item then that goes down here in the second last line is going to be our opening cash balance, and then after that's our closing balance. So opening balance, closing balance. So our opening balance and our closing balance. And all this means is opening balance is the amount of cash you had at the start of that month. So the amount of cash you had at the start of July in this case. In this column, it'll be the amount of cash you had at the start of August, start of September, etc. The closing balance then is the amount of cash you had in the business at the end of July, the amount of cash you had in the business at the end of August, at the end of September, etc. Okay, now in some questions, you will see there will be some kind of opening cash balance at the start of the first month. This usually happens if the business has been in operation prior to the start of the question. However, in this question, and quite often in the style of question, the business is just setting up Slaney Limited is preparing to set up a business and has made these forecasts. So like there's no cash left over from June or from earlier in the year because it's just starting in July. So in that case, there is no opening cash balance at the start of July. They're starting with no cash. And then, as you can imagine, the closing balance, then the amount you have left, well, if you have got this bank loan of 50,000, but you spent 69,992 more than you got in, or well, I shouldn't say spent, I shouldn't be using the past tense because this is a forecast, this is a budget looking to the future. But it means that if you do all of the things that you are saying that you're going to do or forecasting you're going to do during July, it means that your closing cash balance at the end of the month, when I add these two together, is going to be minus 19,992. So if I add this minus figure and this plus figure together, I get a minus 19,992. And that means at the end of the month, you will be minus 19,992 euros. Okay. The next item then, where we'll go on to the next month, which is August. There's not going to be any bank loan for any of the rest of these because you only got a bank loan once. So really, we're just going to be using these last two lines for now on. Well, the opening balance at the start of August is going to be the same as the closing balance at the end of July, because like if the last day of July rolls around and you had €5 in your bank account, well then the next day you're still going to have €5 in your bank account, which will be the first day of August. So always your closing balance in one month is going to be the exact same as your opening balance of the following month. So I'm going to put in this minus 19,992. So you're starting August down nearly 20,000, but through all of the receipts and payments during August, you end up bringing in net figure of 23,713. So you can kind of wipe out this debt, as it were. So if we add the two of those together, 23,713, and since this is a minus figure that we're adding, 19,992, you'll be left with a net figure of 3,721. So at the end, 3,721. That's how much cash you'll have left at the end of August. And again, whatever you've left over at the end of August will be the same amount that you'll have at the start of the next month, which is September. So 3,721. So that's how much you have at the start of September. But during September, with all your receipts and payments, the difference between the two means that you brought in 65,853,000 into your bank account or into your business during that month. So you had 3,721. You brought in an extra 65,853. So plus 65,853. It means at the end of the month you'll have 69,574. Again, the closing balance for this month becomes the opening balance for the next month. Again, we add the two of these together. So I'm going to plus 73853. And I get 143,427. So your cash amount is building up. So at the end of that month, you have this amount, which will be the same amount you have at the start of the next month. Then I'm going to add on this 8613, giving me 224040. That'll be my opening cash for the next month, which I add on to my net cash for that month. Giving me a final balance of 309,503. And that's how my cash budget looks at the end.